Hi everyone, before this video starts, I want to say thank you guys for 100 subscribers. I really appreciate it. And with that being said, I want to share this super special high conviction play that I have. I think it's definitely worth your guys' time to listen. I think this stock is going to outpace the market. And at the end of this video, I'm going to share my portfolio allocation. So I hope you guys are willing to stick through this lengthy video. I'm going to explain both technically and fundamentally and share what I think about positive catalysts and risks with the stock. So this stock is Snapchat. Snapchat has been on the market for a while. It's probably one of the worst stocks on the market. It's a money burning stock. However, every stock, every company has a right price to buy. And if you guys have followed Snap, you guys have probably noticed that there's been many good opportunities to buy Snap for a swing trade. Now, I want to start with a little bit of fundamentals here and compare it to Snapchat's peers on why I believe this stock is undervalued. So, to start off, if we see monthly active users on Snapchat, 850 million. Pinterest, 518 million. Now, revenue on Snap, a little bit outdated here, is 4.8 billion. Pinterest, 3.2 billion, although Pinterest is growing at 23% year over year in terms of revenue, whereas Snapchat was just 21%. Meta, 27%, with much higher revenue than both. Now, Snap trades at a 2.8 price to sales, whereas Pinterest trades at 6.1 and Meta at 9. The obvious reason why Pinterest and Meta trade at a premium to Snap is that they're growing faster and they're more profitable. Meta, of course, way more profitable than both. But Pinterest just barely broke profitability, and their revenue growth is growing just barely faster, and they have significantly less revenue. If you looked at all the numbers I mentioned, you might think, well, other than knowing that Pinterest trades at a premium, you might think that Snap would be worth more than Pinterest with more users, more revenue, and very similar year-over-year growth. But Snap trades at a market cap about 14 billion, whereas Pinterest trades at about 20 billion. So that's essentially the first part of my thesis on why Snap's undervalued. Now next I want to talk about Snap and their losses. This quarter, Snap lost $250 million, which is a great improvement of around 380 million from the same quarter of the previous year. Now you might be thinking, well, Snap looks like it's on its way to profitability. Maybe you're thinking that it's just, a little bit of not as bad of a quarter. But anyway, I think Snap is on its way to profitability, and I'm going to explain a little bit more about that later. If we look here, we can see Snap's stock-based compensation and its repurchases. This is extremely important because everybody knows Snap dilutes like crazy. And I think it's really important for us to understand the dilution, understand how they're managing it, and also tie back to supply and demand, because that is ultimately what moves the stock's price. So to give a quick summary, you can see at the bottom, Snap purchased 150 million shares for 1.5 billion, an average price of $9.91. This is since Q3 of 2022, and they purchased an average price of $11.06 in just the most recent quarter. Right now, Snap trades at an average of at a price of about $8.30. With that being said, we know the company, which only does opportunistic share repurchases, we know Snapchat is willing to purchase at these valuations. So that being said, we can kind of think of it almost as if like a little hand that's willing to help us and raise the price. Now, something that's kind of nice about this is, other than that hand, you might think, well, Snap kind of drops nearly every earnings report. Well, how does it get back to the price, a higher price to drop at almost every report? And I think one of the things is, well, the market kind of recovers, but also it's just the buybacks. When Snap's price is low, they have to do buybacks because they're giving out a ton of stock-based compensation. Like last year they gave about 1.2 billion. If we're looking at the current market cap, that's around 8% or so. So that being said, they would be diluting at 8% if the stock price was at its current price. The only way they can really manage their dilution is by increasing the price because the dilution is based on compensation on dollar amount. To meet that, they need to give these shares, right? And the lower the share price is, the more shares they need to kind of hand out. So with that being said, Snapchat, the reason they do these buybacks, I think, is because they need to create a floor for the price and really push it up to, not only manage their dilution, repurchasing some shares, but also manage it in the sense that they're giving less shares out when the price is higher to meet their stock-based compensation that employees get. So that being said, Snap does not have an outstanding buyback program right now, but I believe they will have one very soon, probably the next quarter, to push up the price. And, you know, you might be thinking, well, can they afford to since Snap is very unprofitable? They're free cash flow positive, so we're not worried about cash burn here. But you might be thinking, well, do they have the cash? They have 3.1 billion in cash. They have no debt maturing this year and just a little bit next year. So can they afford a buyback program? Absolutely. They absolutely can. So I got this chart open here. I'm going to talk a little bit about technicals before I get back to some of the catalysts. If we look at Snap, every time it got in this, 7 to kind of 850-ish range, it saw a very good run up. So, every time after this run up, it would have been a sell, but buying it at these prices, despite the fact your return would have been very lucrative. Very, very good returns here. So the stock is extremely oversold right now, and that doesn't mean too much, honestly, just because it can always get more oversold. And at 936 it was very oversold, but within a few days it dropped an extra 12 or so percent and became more oversold. But it is a little bit better to buy oversold than overbought. And if you did buy every time it's oversold since late 2022, it would have been a pretty good choice. So we can see that this is kind of the floor price. There's kind of that demand area. And that comes from traders. It comes from the company itself doing its buybacks, the opportunistic share repurchases. But yeah, this is just a little bit about what I wanted to show you about the technicals. My thesis for Snap is significantly more fundamental. And revisiting these prices, it honestly does surprise me a bit because the company's made great progress compared to these times. Like if we look back to May of last year, the company was, barely growing, might have been one of its negative quarters actually. And now it's growing at, about 16% year over year in terms of revenue. So much better. Makes a lot of sense to price it at higher multiples here. And it's improving in terms of profitability. Now, Snap's growth is accelerating, and its quarter two wasn't too great, but as the growth accelerates, the market will likely reprice it to higher multiples. As you guys all know, this year is an election year. So, with that being said, there's political advertising, and Snapchat will obviously be one of the beneficiaries of the political ad spend this year. One thing I really want to talk about here, and this is the reason I think Snap is turning the corner in terms of profitability, is Snapchat Plus. Snapchat Plus gained 4 million subscribers in its first year and 7 million in the second year. So it has a total of 11 million. And as you can obviously tell, that shows acceleration in real terms. And if we're thinking about 250 million unprofitable in a quarter, well, the difference of that is simply 21 million Snapchat Plus subscribers. That could be the difference, assuming, flat ad spend and flat ad revenue. And it's very likely they could be, getting those extra subscribers within a couple of years here. And quarter two is the worst quarter essentially for Snap. So, with that being said, we could be seeing its first quarter profitability a lot sooner than most people expect. Other than that 2021, which was kind of just a false quarter, but its first real quarter of profitability, a lot sooner than people would expect. And just like 2021, on that first quarter of profitability, it jumped 62%. When Snap is ready to post that like first real kind of quarter, it will likely jump a lot. And by the time everybody realizes Snap is about to be profitable, the stock price will likely run up a lot. I think most people probably think about Snap and think, well, profitability is far away. I think it's a lot closer than most people think. And to me, it seems that they'll clearly be profitable within a couple of years. And, you kind of got to front run the market if you want to kind of take advantage of that price action. So, Snap, another thing I just want to mention, and this is partially why I think buying now is, kind of a pretty good idea, is because every year Snap releases stretch goals internally. And these stretch goals get leaked per se. I don't really think it's a real leak, but besides the point, they release unrealistic goals that are well beyond what they can do. And every year the market reacts very joyfully. It gets some upgrades. Snapchat it's joyful. It rises 10, 15 or so percent. So that's always good. It gives it a bit of momentum and it protects you a bit. I believe that with these stretch goals, they're going to mention some sort of quarterly profitability next year, which actually I think it might be realistic for that fourth quarter, and that would be extremely bullish. Now, I kind of explained most of my fundamental thesis on why it's bullish. If you guys have any questions, please feel free to let me know. I wish I could have explained a little bit better than I did, but essentially, I'm super bullish fundamentally here. And yeah, I do want to share a couple risks with Snap though, which is they're working on unifying stories and their spotlight, which should be beneficial, but before they tried some sort of transition and it caused them short-term disruptions which made them lose a lot of users. I don't think they're going to make the same mistake in that sense, and they did bounce back, but if they did, it could cause some short-term headwinds here. Also, as you guys know, with Snapchat, their primary business is their ad business. The ad business is extremely competitive. We got Google, Meta, Amazon, Netflix. They're all kind of vying for ad dollars, and it's getting more and more competitive. And all these more giant competitors like Google and Meta, they have competitive advantage and deep pockets that Snap doesn't have. Like for example, when TikTok was getting popular, Meta released its copycat 3 months faster than Snap. And that's just one of the advantages that a big company has that something like Snap doesn't have. And I think that's one of the risks. But why I think Snap's a little bit special here is, it's kind of a sticky company, but instead of just relying on its ad revenue for that profitability, for that growth, that Snapchat Plus is a big factor. And I think it's kind of one of the reasons that it's such a great pick to beat the market in the future. So, a little bit about my allocation, which I promised that I would share, is I have nearly 50% of my portfolio in Snap, not just in shares, but actually in leap calls. So, with that being said, I've talked that it's bullish. I said, it's one of my highest conviction plays, but I think just my allocation being at nearly 50% and with not just stock, but also options, I think that itself speaks on my confidence. And I also like to say, if you watched until this point, feel free to just, bookmark this video or whatever and come back in the future. And if I'm wrong, feel free to harass me or whatever. But I'm quite confident, obviously without giving any financial advice here, I'm quite confident that I'm correct. And that's not to say that Snap can't drop, in a bad market to $7, maybe even $6. But the downside here is somewhat limited compared to its upside. And I think this stock will definitely outperform the market in the intermediate term. I'd say if you guys are going into this stock, give yourself, maybe 1 or 2 years of time at the most, and I think you'll see good returns. But honestly, I believe that if the market's all right, we'll be seeing good returns within 1 or 2 quarters. And, I'm not extremely bullish on the long-term future of Snapchat because, I don't really know these companies, nor am I a long-term investor. But the fundamental reasons, to me, they seem pretty bullish. So I think we can definitely get a good rise here. And yeah, that's basically it. Thank you guys for watching this video. Just remember, if you guys have any questions, feel free to let me know. I'll try to get back to you guys. Might take a while, but I'll definitely answer. But yep, that's it. Thanks, guys.